Thank you, thank you. My name is Adam Kai. I'm the CEO and founder of Virgo CX. This is actually the fourth year for me to be in futures. Very glad to be back. Today, I'm actually going to talk a very different topic. So as some of you may already know, Virgo CX is a Canadian-based regulated cryptocurrency exchange. We have been running that for 4 years now. However, because right now it's bearish market, we have been thinking what's going to be the next for the digital asset space. So what's the next thing that will be potentially bring our world, our digital assets, 10 times growth than what we have now? So here is what I'm going to talk today. When crypto meets real world, I'm going to talk about starting with real world asset. Okay, so what's the real world assets? By definition, is we actually bring the real world physical assets, securities on chain. So we can empower the real world assets by leveraging blockchain. So some of the popular use cases will be the treasury markets, real estate, lending markets, even some of the very new innovative ideas such as carbon credits. So first, from the high level picture-wise, we estimate the real world assets by 2030, it's going to be $16 trillion. So let me put numbers into context. So right now, the digital assets crypto world, the total market cap is only about $1 trillion. So we're looking at least 16 times of the current crypto markets by 2030, led by equities, bond, treasury markets, etc. So let's start with the treasury assets. As you can probably imagine, there are a lot of DAOs currently in the market, which holds billions of dollars in assets. And in the past couple of months, because of the DeFi field, the yield has been continuously going down, people are looking ways to achieve returns. So real-world assets come into play, which is first majorly being capitalized by MakerDAO. They actually invested more than $2 billion in the corporate assets, corporate bonds, to support the DAO's returns. And also Frax, one of the major stablecoin, also is in the process of applying for the Fed market account so that they can get access to the Fed treasury yields. So if you look at the on-chain data, from the beginning of 2023, starting from $110 million, and to now, which is only about slightly below 1 year, we have grown to more than $500 million on-chain assets. And average yield to maturity, which is 4.2%, which is much higher than a lot of the current DeFi protocols that can produce. And if you look at this data, you'll be surprised, almost more than 50% of the yield currently coming from MakerDAO is from the treasury assets. So they actually get it from the tokenized treasuries, which yield average about 4.2%. But if you look at what they can get from Aave at a compound, which is just about 2 to 3%. Okay, next, about the lending markets. So there are quite a few use cases we can put the lending securities actually on-chain, such as corporate bonds, commodities, real estate, and also carbon credits. So let's starting with looking at the total distributions of different type of bond. So over $4 billion loans have been issued on-chain. And with consumer, auto, real estate, different type of projects issue loans on chain, that accounts for more than $4 billion. And out of the RWA issuance marketplaces, the current leading projects is called Central Fridge. So they issued more than $400 million on-chain real-world assets, led by Block Tower, which actually led a lot of the bond issuance, and that helps them to grow significantly in the past couple months. And for carbon credits, as the world economy now becomes more green, people care a lot about how can we control the total pollution, things like that. So the carbon credits now becoming a bigger and bigger topic. But there is not a big market or mature market yet to trade carbon credits currently in the world. So leveraging blockchain technology does give people potential opportunities to trade carbon credits. And we do estimate the carbon credits to grow at least 25% year over year. And we can see, hopefully, by today, with only $750 million market cap, we can get to by 2030, $10 to $25 billion for the carbon credit trading. Okay, now let's talk about the most exciting part from our perspective for the real world assets, which is real estate. So in the current high interest rate environment, this is a big question to be asked is, the real estate becomes too expensive to afford, not only by the property value, but also by the mortgage payment. I'm sure some of you have already received multiple trigger events this year because of the rising interest rate. So in order to give a bigger and better real estate investment, putting real estate investment on chain, giving people the ability to do the fractionalized investment, and also can make such an illiquid asset to be liquid is a big vision. So if you look at the market cap, real estate in total sits at over $300 trillion market cap, which is 300 times of the crypto assets. So this is certainly a very big market. If we can tokenize real estate markets, even to a small portion of the current market cap, that's already going to empower the digital asset community by a large margin. Okay, so at Virgo Group, we are thinking about tokenized real estate investment for a while now. And of our research, I think it's very realistic to build a platform within Canada that can tokenize commercial real estate, residential real estate within Canada, so that we can give people the opportunities to invest into real estate with the fractionalized investment possible, and also they can get the liquidity they want. And we're actually looking potentially to launch the fractionalized real estate investment with a proper regulatory framework in the next little while, somewhere around 6 months. Okay, so now let's briefly talk about crypto wealth management. Okay, after the past years, of kind of seeing how the market evolves, I think the crypto wealth management, asset management is very much needed in order for normal users to ride the next wave of the industry growth. Because we have to admit the crypto investment is high risk. And also it requires a lot of expertise, a lot of knowledge in order to get yourself through such a challenging environment. So that's why we actually need professionals to help us to take care of the crypto investments. So look at the size of crypto wealth management industry. So we think within the next 3 to 5 years, this sector is going to grow significantly, with the big players such as BlackRock, Fidelity looking to get the US ETF approved, with Hong Kong already approved their first crypto ETF and also allowing the crypto private fund to be distributed. And Europe officially launched the first Bitcoin ETF in July. We definitely think that the crypto asset management industry is going to grow exponentially. With Virgo Group, recently we made a huge announcement of acquiring economic investment, now renamed to Virgo Digital Asset Management. So it is a fully licensed entity in Canada with investment fund manager, portfolio manager, and EMD license in Canada. So we look to launch crypto private fund very soon that can provide various type of strategies, such as quantitative strategy, absolute return strategies, macro strategies, so we can really help Virgo CX users, existing users, future users, and anyone who is interested in the growth of the crypto industry. And we believe with all this together, we can definitely help the industry to grow to the next level. So just to summarize, I believe RWA, along with crypto wealth management, can turn the narrow definition of crypto assets to a much broader digital assets. And I can say for sure in the next 5 to 10 years, our market cap for digital assets is going to be easily above $10 trillion. And we hope everyone of you staying here today can join the next wave of the exponential growth of digital assets with us together. Thank you so much.
Thank you, Adam Kai of Virgo CX.